Hey, what's up, team? Good to see all of you. Welcome back to Walks on Wall Street. Before we get started, hold on. Somebody's saying, do you record these videos in 1080p or 4K? So the live streams are in 1080p. Hopefully in a couple of years we'll be able to stream in 4K. I think that'd be crazy if we could, but unfortunately we cannot. But anyway, guys, I apologize. What the heck? I'm late. I'm about 30 minutes late, more so than that. It's 9:17 at night, my God. I do apologize. I did need to go to a dinner. I had a dinner I needed to attend. So once again, do apologize for that. But tonight on Walks on Wall Street, I think we're going to do a quick market wrap-up. Oh, hold on. We're getting some breaking news from the Wall Street Journal. It says Credit Suisse said it would borrow as much as $53.7 billion from the Swiss National Bank to shore up its liquidity. Whoa, that's not good. So check this out. Let's talk about Credit Suisse for a minute. Now, the market was rattled by this. But guys, if you look at, here's what I would implore everybody to do. If you have tradingview.com, if you're on your Bloomberg terminal or whatever, MarketSmith, type in the ticker symbol CS, right, for Credit Suisse, and turn your chart to a monthly time frame. And the reason why I say that is because this bank has been troubled for a very, very long time. And it's not just Credit Suisse, by the way. It's a lot of European banks, most notably Deutsche Bank, which is a German investment bank. We've been talking about that. But this stock is a $2 stock now, Credit Suisse. I think intraday, it was briefly trading below $2. You know, for a moment, it was trading at $1.70. And this came as a shock to a lot of people. I think that weren't, you know, as in tune with the market as others. But Credit Suisse has been a very, very big problem since the 2008 financial crisis. To provide some context here, in June of 2007, in June of 2007, Credit Suisse hit a high of $77.28. Ever since 2007, this particular stock has been on a one-way trip lower. And even if you go back to 2021, right? In 2021, this stock was trading in the single digits. There were some very, very serious problems at Credit Suisse. Now, it's not just Credit Suisse, it is also Deutsche Bank. If we want to take a look at the ticker symbol for Deutsche Bank, it is ticker symbol DB. Now, again, if you look at a monthly time frame, I mean, this stock topped back in 2007, obviously due to the Great Financial Crisis. We won't get into too much history of the Great Financial Crisis tonight just due to a lack of time, but for those of you who may or may not know, Deutsche Bank was really left in a bad spot after the crisis, and a lot of German banks were actually left holding the bag of a lot of these toxic derivative assets, such as the collateralized loan obligations and all of these very toxic subprime mortgages. So if you look at Deutsche Bank now, I think it was down about 7% on the day, trading below $11. Now, if it were me, and I had to place a bet, I think you're going to see this stock in the single digits as well. The ABX girl is here, former banker, says, Tom, Credit Suisse moved their headquarters from New York City to Raleigh, North Carolina area, spent a ton of money for their business, waste of money for them. You know, I didn't know that. It's interesting because, you know, I was walking, and ABX girl, you probably recognize this from the live streams. Whenever I work out of the WeWork right at 31st Street, at Madison Avenue, as we're heading down towards Madison Square Park, I think that's the New York City headquarters right there on 20th Street. That's the Credit Suisse headquarters. But anyway, guys, we're going to talk a lot about it, but more importantly to me, and I'm actually going to put this in the chat for all of you to see, I mean, the movements in the bond market over the past 3 days have really been historic. It really, really has. I mean, you've seen yields come down across the board. The yield curve is coming down. And that 30-year fixed rate mortgage is now 6.5%, which is kind of crazy to think about because just on Friday we were talking about 30-year fixed rate at 7%. So you could really, I mean, understand the crazy amount of buying in the bond market here. So again, if you look at the chat I just posted right here, it's going to bring you to cnbc.com/bonds. And what you'll be able to see is all of the yields across the entire yield curve, from the 1-month treasury all the way to the 30-year. And then as you scroll down that page, you'll be able to see the UK government bonds, which they're called the gilts, and the German government bonds, which are referred to as bunds. If we take a look at the 10-year U.S. Treasury yield, we are trading at 3.473%. However, more importantly, everybody, let's take a look at crude oil. Crude oil has absolutely fallen off a cliff. We are trading at $68.30. However, we are getting a little bit of a bid in after hours trading. Stocks are up. Now, if you just sort of looked at the closing price today of the S&P, and hold on, I'm just zipping up my backpack. I'm all disorganized. Again, I apologize for being tardy. You know, take a look at the S&P 500. Let's not look at the futures for a second. Let's just look at the cash close today. I consider that very bullish. You know, we had an intraday swing in the S&P. I think the low of the day was 38.37. We rallied all the way back and we closed at the dead high at 38.91. I think futures, if you look at ES, the E-mini futures contract of the S&P 500, I think we're actually up about 16 points. So I don't know. We'll see. We're still trading below the 200-day moving average, which is a little bit concerning. But all in all, you know, we'll see if Credit Suisse brings down the market tomorrow. We'll talk about it. Let me just close up here. Very windy, guys. No snow. It's funny. Tomorrow is actually going to be a high of 60 degrees, which is quite nice. You know, I texted my friend today and actually posted on Twitter. I said it's very refreshing that you walk outside in New York City at 6:30 at night and it's still sunny out. So things are looking on the up and up. Let me just news. Yeah, I mean, you know, to John's point, I actually just saw that come across the screen right now as we were just starting the live stream right at 9:17. But is this let me ask this, and I'm being genuine when I ask this. Is this of any real surprise to anybody? Really? I mean, is it really of any big surprise? And I'll expand on what I mean by that in a second, but we are now on the ground floor here in beautiful New York City. It's a very clear night. We are starting off our walk on 57th Street, Billionaires Row. Bree Grams is highly likely to get distracted, an Irish exit. Got yours. Is anybody else having issues with Webull desktop trading platform? After I open a news article, the charts won't respond. Anybody else having this problem? Well, I mean, in my view, and not to be an alarmist here, and I've been very outspoken on this for quite some time, I really, really would advise against anybody using I would say the severely discount broker dealers like Robinhood, Webull, and the like. I would really, really stay away. I wouldn't put any significant money in any of those platforms. Now, touching on that a little bit, again, I don't use Robinhood. I would never recommend it. I'm very, very scared to put money there. But supposedly, there were some individuals that owned equity put options on a lot of these banks that went under. And I guess Robinhood made a statement, I guess allegedly, saying that they're not going to honor those contracts. Because I mean, if you think about it, if you're buying a put or you're buying a call, that is a contract, right? They're called options contract, and you really need to honor them. So look, I don't know what's going to happen with that. I'd assume they would just be exercised, but I really don't know. That was a big question. I actually posted that on Twitter too. Anybody who held short positions in the form of options or put contracts on, let's say, Silicon Valley Bank, or even, what's the other one that just went under? I'm going crazy today. I had a really busy night. The other New York bank that went under. I'm not too sure how you guys are going to get teed up on that, but I'm sure they will. I just don't know the process as of yet. Hey, Nina is here. Says, thank you, Tom. A few people I know use Robinhood. Oh, by their real estate broker's advice? Bad business? Yeah, I would never put any material money in that, man, to be honest. Signature, thank you so much, Chinook. Appreciate it. Yeah, so I don't know. For all of those options holders on those particular stocks, I think they'll probably just get exercised. But there was a big fight about Robinhood today. I wasn't really involved in it. I was just so busy today, but I really would place a reminder of caution, I should say, against the stock trading broker dealers such as Robinhood and Webull. I would never ever put money in them. Hey, DJ Vegas' bank stocks were up today after yesterday, so I don't know if those people shorting them with puts made money. Well, I'm talking about the stocks that are no longer trading. So, for example, Silicon Valley Bank, it didn't trade on Monday, right? For obvious reasons, the bank is done. As well as Silvergate, which is a New York-based bank. So there was a lot of people in short positions on these that held the contracts or puts. Just in layman's terms, for those people who don't know what a put contract is, it gives you the right but not the obligation to sell 100 shares of an underlying stock, right? So it's essentially a bearish or a negative bet against the company. But those stocks are no longer trading. Now, I don't really trade options. The only time I do buy options is if I have like a really big position in a stock and I need to hedge it into earnings or something. But I'm not an options trader, so I don't know how that's going to work. Maybe some of you who are a little bit more educated, if these things don't trade and they're not going to trade OTC, I don't know how they're going to tee all that up. Who knows? Hey, Fred X, good to see you, my friend. Lemonade Abdullah is here. Two Wheel Freedom says Robinhood had their trading platform to attract young investors, and it worked. Many of them losing money on bad trades. Yeah, well, I mean, I think the thing for me, the reason why I've always stayed away from it is because, I don't respect unethical marketing practices. And again, I need to say allegedly just due to legal reasons, but I think it's pretty obvious, right? I mean, if you are marketing a platform to people, and every time you make a trade or buy or sell a stock, it's blowing confetti in your face, I don't know. I think it's sending the wrong message to a lot of young people. It's not a gamble. The stock market is not a casino, right? And I think the way Robinhood really attracted a lot of young people is to gambleize or make investing and trading sort of seem like a casino. And I really think that's unethical, and I think it's going to do a lot of damage for people down the line. Yeah, it may be funny, at first, right? Because if you're a kid and maybe you're in your 20s and you're just gambling $10,000 or $20,000 on options on Robinhood, yeah, it's maybe a good laugh, but the thing is, when you get to 65 or 70 years old, it's not going to be funny anymore when you have no money for retirement, you haven't taken things serious. So, I don't know, I never really liked the marketing practices by Robinhood. I always thought they were kind of deceptive and unethical, in my opinion. Now, maybe you guys disagree with me, but I don't know. I also really don't like, and not to, hammer too much on Robinhood, I don't like the fact, I don't really like referral programs and things like that. So Rob, and this was a big problem with FTX as well. If you notice, FTX, which was one of the major cryptocurrency broker dealers, right, trading platforms, if you will, one of their main strategies to get to attract money to the platform was going after celebrities, right? Celebrities and other, I guess, quote unquote influencers, if you will, to pay them ridiculous amounts of money to promote their platform, right? Now, the downside about that, these are two really nice Teslas here. I actually read a really interesting article. It was actually the cover story of Investors Business Daily this weekend about the EV market in China. Maybe we'll talk about that tomorrow. Now, the unfortunate thing about that is celebrities, right, they don't really understand. Right, they're celebrities. They make movies, they do other things. They don't have time to really, understand an investment product or a platform. So they just take the money and they, spew it on their followers without really even understanding what it is. And that turned out to be a disaster. FTX turned out to be a big Ponzi style scheme, similar to Bernie Madoff's Ponzi scheme. And I think I'm not saying Robinhood is the same, but I just think I can't support a company that promotes bad investing behavior, right? And I think a lot of people, unfortunately, that use Robinhood have succumbed to that. Michael Joseph says, I sold Twitter options, and when the stock was halted at the Musk takeover, the options out of the money were basically worthless, which made me a profit easily, says Michael Joseph. Hey, Hawaii is here. Good to see you. Everybody, we are now at the corner of 57th Street and 5th Avenue. This is the Louis Vuitton building. But tonight, I think I want to walk all the way over to Sutton Place, which is one of my favorite, which is really one of my favorite places in the city. Really nice. We'll be able to see the 59th Street Bridge. It's a little windy. It's not that cold. Tomorrow is going to get up to about 60 degrees, so that's good. 446 says, Tom, what's your opinion on the Federal Reserve? Will Powell make a move of a quarter point or a half? I mean, that's the $1 million question, right? That is really the $1 million question. And, I actually tuned into CNBC quite a bit today. And I usually don't do that. You guys know that. But I did. I watched quite a bit of CNBC today. And there was a lot of people making a lot of good points about it. Real quick, this is 5th Avenue. So if you look straight down here, this is the spire of the Empire State Building. Now, I'll give you my take on the Fed, okay? Now, next week is a very, very important week for the financial markets, not only in the United States, but worldwide, because that is the next FOMC meeting. All of this construction, by the way, everybody, is the brand new Tiffany's. So as you can see, if you're familiar with the jewelry company, Tiffany & Co., this is going to be brand new. Pretty cool building. Hey, Evan Weeks is here. Good to see you, Evan. So here's my take. I think if the Federal Reserve does not, okay, keyword does not, well, you guys will be able to see a sneak peek inside. Let's see. You can see all the construction workers. It looks kind of nice in there. Yeah, this is going to be totally gut renovated and brand new. If the Fed doesn't raise at least 25 basis points next week, I think that's going to send a very, very negative signal to the market. I think it's going to freak a lot of people out. And the reason why I say that is this. We know the Federal Reserve, the Treasury, and the FDIC work together to provide this bailout program for Silicon Valley Bank depositors. And people who are not really in tune with the market, if they just see a headline next week that the Federal Reserve paused interest rate hikes or even cut interest rates by 25 basis points, assuming Nomura is correct. Nomura, which is a major investment firm, actually came out and said at the next meeting we're going to see a cut. I think that's going to really spook the market, because the way I would interpret that is that this backdoor lending program right, by the Federal Reserve to bail out the depositors is not going to work. That's what the message, that's at least the message it would send to me. It's that this thing is not going to work and there's going to be way, way more contagion. Because if you think about the main problem here, and here we are at the IBM building, it's a lot of major banks are holding longer dated mortgage-backed securities and other securities, right? It's a lot of people are technically underwater on these things, right? So if the Silicon Valley Bank, they purchased about $90 billion worth of mortgage-backed securities, and as interest rates went up, well, I mean, the value of those bonds significantly decreased. So if the Fed starts to cut rates, I think that would actually technically help the situation, because obviously the correlation is as interest rates go up, bonds, the prices go down. And that would send a signal to the market that there's really bad things brewing under the surface here. So, I don't know, what do you guys think? This is the Vanderbilt building, One Vanderbilt. And right across the street we have First Republic Bank. 446 is thanks, Tom. I also feel there will be a quarter point hike as well. Goldman said last week no move by Powell. They may be wrong this time. Yeah, I mean, you're right. So 446 is Goldman Sachs. There was some breaking news. Goldman Sachs put out a report saying that they don't believe the Federal Reserve is going to raise interest rates at the next meeting. They'll actually pause their hiking cycle. But I think for perception, right? And we talked about this a couple streams ago. The fractional reserve lending and fractional reserve banking system that we live in, right, is really only held together by one thing, and that is trust in the system. So technically, as I've explained, any type of bank is susceptible to a bank run if everybody goes to the bank at the same time and withdraws their money. I mean, that's just the system we live in. When you deposit money in a bank, it's not like it's sitting there. The bank then goes and makes loans on your money to make yield on your money, right? To make money on your money. So no company, or no bank I should say, not Silicon Valley Bank, not JP Morgan Chase, not Wells Fargo, no bank, okay, no bank could have withstanded what happened to Silicon Valley Bank on Thursday with $44 billion worth of withdrawals in 24 hours. It's just, no bank could have withstood that. So the argument here is, oh, should we have bailed out this bank? You know, moral hazard this, moral hazard that. We could argue this till the cows come home. But the reality is, if we didn't act and do something, this would have spooked a lot of people. And a lot of people would have started pulling their money from regional banks and other smaller banks for no reason, out of nothing other than fear. So, look, I mean, we could argue the moral hazard thing, which I technically agree with, but the situation that we're in, all of these banks are holding these bonds with long-term duration that they purchased when interest rates were extremely low. 3T3, this is Tom. I think the Fed's going to do 25 basis point hike. Powell needs to save face. He'll word it as strength. Yeah, I mean, I absolutely agree with you, my friend. Really quick, I want to point out this building before we head over to Sutton Place. This is 432 Park Avenue. This is one of my favorite buildings in the city. It's very unique. There's been a lot of problems with it. There's a lot of interesting articles, I think, from the New York Times, the New York Post about. I'm not sure if the class action lawsuit is still happening right now, but a lot of the residents were suing the developer because there was a lot of big problems with the building. Sometimes during big windstorms, the building sways back and forth so noticeably that you can hear the building like cracking and making all these really loud noises, and it's been freaking a lot of the tenants out. So hopefully that gets resolved. But to your point, I agree. If Jerome Powell comes out next week and solidifies a 25 basis point rate hike, that's actually going to signal strength to the market. That's going to signal that this banking crisis is taken care of and now we are steadfast on trying to bring inflation down to a reasonable amount. But if not, people are going to be like, oh my gosh, this situation must be freaking horrible. I mean, they have to totally course correct and renege on their promise of getting inflation under control because more banks must be blowing up. Here we have 425 Park Avenue. This building is significant. It is home to Citadel Securities. Now, speaking of the moral hazard argument, it's kind of funny we're standing outside of 425 Park because Ken Griffin Citadel Securities is under the impression and holds the opinion that we shouldn't have bailed out the depositors. He thinks that is a massive, massive moral hazard. Cosmonauts is why would anybody hold a significant amount of money in a bank that isn't FDIC insured? Well, we sort of went over that. I mean, look, you got to understand, with Silicon Valley Bank, they were banking a big venture capitalist, right? And if you think about what a venture capitalist does, is they invest into small companies, right? Small startups. So if I'm a startup, right, and I pitched my startup to investors, right? Let's say I go to a venture capitalist and I pitch Walks on Wall Street. And this is just an example, right? And I get $8 million in a Series A check. Well, I'm going to deposit that in Silicon Valley Bank so I could use that for operational expenses to pay employees, cut payrolls and the like. So that is why at this bank, you're correct, about 80% of the depositors were FDIC uninsured, but you have to look at the clientele. It was big VC firms, right? And VC firms' portfolio of investments of multiple startups that use these bank accounts mainly to fund their operational expenses. So I agree with you that if you think about JP Morgan Chase, Bank of America, some of the other very big banks out there, they have more diversity in their depositor base, retail customers like me that may only have a couple $1,000s in the accounts. Oh, is it buffering? Let me see. Tommy G says my 403B pays 8% interest. No bank is going to give me an 8% return. That's true. Tommy G, good to see you. Hopefully we're not buffering anymore. Here's the Ferrari dealership. Well, I guess showroom. Let me read some more of the chats. Hey, Evan Weeks, is moral hazard or not when the alternative is to destroy depositors' faith in the banking system and thus undermine the foundation of the U.S. economy? I land on the side of guaranteeing depositors. Yeah, and I mean, Evan Weeks, that is actually my point of view. And it's kind of interesting because I try my best, okay? I try my best not to be biased, right? Because you guys know I am a pure capitalist and I'm a conservative. But as I was listening to other sides of the argument, as I was listening to multiple debates on Twitter Spaces, with very, very big hedge fund managers, very, very big venture capitalists, and even startup founders, I sort of realized how this could be a really freaking big issue here. Because when let's say, for example, this was a big hedge fund that blew up, right? $2 billion hedge fund, and they blew up, they went to zero. That, okay, is a no-go. That is a no-go for a bailout. You go to zero, you lose all your money, you took a risk. It's kind of different when you're dealing with the bank because essentially the people who, there was innocent people, right, that literally just went to the bank and deposited money in the bank and then poof, their money's gone overnight. And what made it even worse is that the majority of the depositors were using these funds to keep people employed, right, to pay their employees, to cut payroll. So it could have been a really, really bad downstream of effects, and it could have caused mass layoffs. Now, the way they did it, I don't think, guys, we also have to remember, again, it was 48 hours to make a decision on this, so it's not going to be the perfect decision, but I think the right thing to do is what they did is to let the shareholders, right, or the stockholders go to zero, let the bondholders go to zero. And what I'm hearing, and this isn't confirmed by the way, but there's some rumors out there that regulators are actually going to be going back to the C-suite, anybody who sold stock a week prior to the collapse, I think they may claw back that money. If they do that, I think that's the right thing to do. If we can guarantee the depositors, are made whole, I think that's the right move, but let all the shareholders, the bondholders, and the C-suite go to zero. Again, is it the ideal situation? No, it's not. But again, as we've explained many times here on Walks on Wall Street, if on Monday morning, the average, let's just say, person who really is not caught up on the financial markets, they're having their morning coffee and watching the Today Show, and they hear on the Today Show that, wow, Silicon Valley Bank, the depositors are losing their money. This is crazy. I mean, I thought there was supposed to be really smart people in Silicon Valley. If those people are losing their money, what does that mean for me? And people would freak out and panic, right? And in the fractional reserve banking system that we live in, the system is only held on by trust in the system. If there's no trust in the system, you're going to have bank runs and you're going to implode, and it could be Armageddon. So look, in hindsight, maybe that wouldn't have happened, but I think we did the best with the most horrible situation we've had. Who knows? Hey, Kelly Wilson says, I thought there was a northeasterner coming in. I thought so too. I mean, it was flurrying a little bit yesterday, but we literally got nothing here in New York City. It was snowing for maybe 2 hours last night when we were doing the live stream, and that was about it. So Evan Weeks says, U.S. Treasury bonds seem to be the best investment right now, but do your own due diligence. Well, I think that attracted a lot of money. Right, so think about what Evan Weeks is saying, right? And we've been talking about this on the stream as well. This is the Seagram building. For all of those you don't know, the Seagram building is actually my favorite building in all of New York. It's right here. But it seems like a lot of people are crowding into U.S. Treasuries. Why? Because bond yields have been getting blasted over the last 3 days. If you go to cnbc.com/bonds, you'll actually be able to see the entire yield curve in real time, all the way from the 1 month Treasury all the way to the 30-month. Now, just a couple days ago, we were talking about the 1 year Treasury yielding about 5.25. Now, I think it's what, 4.5? I mean, those are huge moves in the debt market, right? So again, as we review, as people start to buy bonds and crowd into bonds, that puts pressure on yields. So I think you're still seeing this crazy flight to safety. I think people are still a little bit freaked out, but not as freaked out as they were over the weekend. So, we'll see how it plays out. And we'll see how this Credit Suisse situation plays out too. Hey, Gamers, Floridian is here. Welcome. John Kelly says, yep, only flurries in central Jersey too. Lots of wind and no accumulation. It was pretty windy last night too in the city, John. Tonight, not too bad, but I'm assuming as we head further east in Manhattan, it's going to get pretty windy too. Hey, Richie is here. Says, hello all and Walks on Wall Street. Paul says it was a dud of a storm. Now, there's sort of, well, I don't want to say, it's something I say all the time. Anytime a storm is really hyped up in New York, you never get any snow. But anytime, the weather people and the meteorologists sort of blow off the storm, you're going to get crushed. It happens every time. It happens absolutely every time. Paul says it will be curious to see how the dust settles and how the situation will evolve over the next few weeks. I agree. Now, I think yesterday I briefly keyed you guys in on some stock market history. Now, does anybody want to take a guess? And, we were actually briefly talking about Ponzi schemes and frauds tonight. I think we're near Bernie Madoff's old office here. It's called the Lipstick Building. I think it's around here somewhere. Maybe we have to go over one more avenue. But tomorrow is actually the anniversary of the start of the Bear Stearns debacle. Right, so at the start of the 2007-2008 financial crisis, there was a bank called Bear Stearns, and the CEO actually came on the TV to try to reassure investors and try to reassure shareholders and traders and really just the general market that there was nothing to worry about, that they were solvent, that they weren't in fear of going under. Well, a few days later after he did that, JP Morgan Chase purchases the bank, I think, for $2 a share. And it's kind of strange that happened this week about 14 years ago, because if you look at the UK unit, or the UK arm, here we have Blackstone here. We'll actually talk about Blackstone a little bit later on in the stream. But if you look at the UK arm of Silicon Valley Bank, I believe HSBC purchased them for $1.25, which I think loosely translates to £1. So it's kind of eerie. Not too many good things happen in the banking industry in March. So, who knows? Alexandri says, what do you think about to buy gold or silver right now? Well, I don't know. I don't own any gold or silver. Well, that's actually technically not true. I was actually just recently gifted a little bit of silver, so I do own some physical silver, but I'm not long any of this stuff in like an investment account. Gold had an extraordinary day today. It caught a bid again. I think gold, maybe you guys could help me out. Where's gold trading at right now? It's obviously over 1900. I think 1930 maybe. I will say this. If gold breaks all-time highs, which is not too far off from doing that, I'll probably have to get involved and put on a position. Now, for some visuals here, I kind of wish I could throw some visuals, live on the stream. But if you go to my Twitter handle, this is the Bernie Madoff building. So this is where Bernie Madoff defrauded millions, well, not millions, thousands of people right here. Kind of crazy. I mean, the story of Bernie Madoff is just so surreal. I just can't even believe it. I can't really even wrap my head around it, to be honest. But right here, this is it, guys. East 53rd Street. Yeah, let's cross. But from the last time we were over here, I remember the internet wasn't good. So 53rd Street and 3rd Avenue, Bernard Madoff's office was right in here. Kind of crazy. But yeah, I mean, just look at the price action and look at the money movements since this big collapse happened. You had massive money flowing into gold. And the reason why we can know this is we look at the volume, right? If you want to look at the paper, ticker symbol GLD, I think it traded about 200% of average daily volume. If you look at gold futures, tons of money moving in there. So, look, I mean, it makes sense, does it not? Usually the technicals will corroborate with the fundamentals. And if you think about, debasement of currency, I mean, that's essentially what we're doing, right? If you really think about and break down this bailout program of the depositors, it's kind of QE, is it not? I mean, from my understanding, the Federal Reserve is going to honor these bonds at par value, right, or face value. So if the Fed is buying bonds, isn't that kind of QE? Right, that is a stimulant to the economy. So I think a lot of investors realize that. I think a lot of investors were freaked out with the big bank run. So I think you naturally have a flight to safety of gold and silver. And it wasn't just gold and silver, by the way. You look at all the precious metals across the board. Take a look at platinum, take a look at palladium. Those caught a pretty big bid on Wall Street too. Yeah, Rat Finks is printing money equals more inflation. Well, I think the Fed's gonna have to answer to that next week on Thursday. There's probably gonna be a ton of questions about that. So, I mean, we'll see, stay tuned. We actually got the CPI out yesterday. CPI came in line with analysts' expectations, about 6%. We broke that down in depth. However, if you guys want to view the CPI report yourself, please type !CPI in the chat, and I actually programmed the Nightbot to drop the link to the Bureau of Labor Statistics CPI report. Hey, 45 says, did we mention the Credit Suisse headline today? So we did briefly, and I think there was actually some breaking news, 45, right as we started the live stream. But I actually have a little bit of a different take on the Credit Suisse situation than I think many other people might. Because everybody knows, at least people who have been really, really engaged or who may have worked in banking before or just who pays attention to the markets, there's two major banks, okay, that have big problems that everybody's known about. Number one, Credit Suisse. Number two, Deutsche Bank, right, which is a German investment bank. The ticker symbol is DB. For Credit Suisse, the ticker symbol is CS. And I said, this is nothing new. If you go to tradingview.com, if you go to your Bloomberg terminal, if you go to MarketSmith, whatever type of software you're using, and just go to a monthly chart of Credit Suisse. I mean, the thing is a $2 penny stock now, which is it's almost breathtaking just looking at it. I think briefly intraday, everybody, the stock traded like $1.50, rallied a little bit into the close, but this was an $80 stock in 2007, and it's just been on a one-way ticket to zero. Not to be an alarmist, but same thing with Deutsche Bank. Go to Deutsche Bank's stock ticker, and look at the price action from 2008. Now, there's a lot of history behind why this is, right? If you study up on the financial crisis, I should say leading up to the 2008 financial crisis, a lot of German banks and a lot of European banks were loaded up with all of this with all of this nonsense, right? In terms of subprime mortgages, toxic derivative instruments like the CLOs, collateralized debt obligations and the like. So Credit Suisse and Deutsche Bank have always been big problems. I think this Silicon Valley Bank thing is, the last straw, if that makes sense. Really quick, check this out. This is a gorgeous entrance here. Could you imagine living in Manhattan and having literally your own sort of patio walkway and your own door? It's sort of like living in suburbia. This is really very unique, really nice. I'll try to give you guys a shot of the actual face of the building. It's really nice. Maybe I'll take a quick step back so you guys can see. It's all nicely gated in here. I'm so excited to show you guys Sutton Place today. Yesterday we went to the Upper West Side. All week we've been walking around Midtown, but you guys know I love Sutton Place. It's almost going to feel like you're not in Manhattan if you've been watching these streams for a while, because we tend to walk around Midtown. Sutton Place is really gorgeous, really beautiful. Yeah, Krog Dog, agreed. Line Sync, there's quite a bit of media excitement starting to arise around Europe tonight. Credit Suisse and the Swiss government. Well, they're definitely going to have to get involved here. I think we could start throwing around the term too big to fail. And look, I want to make it clear, I'm not rooting for any bank to fail. Right? I'm not a sociopath. But all I'm trying to say is, as it relates to Credit Suisse and Deutsche Bank, these have been two problematic banks for the last decade in terms of their derivative book exposure and things like that. So, look, I think this Silicon Valley Bank debacle is sort of like the last straw, right? It's sort of like the last straw that could potentially break a lot of other things. And as you think about quantitative tightening, in every cycle, and this is why I always recommend the book Principles by Ray Dalio. In the book, Ray Dalio explains in depth credit cycles. And as you'll notice, almost every single time where we go from an environment where interest rates are artificially suppressed and very low to an environment where interest rates start to go up, as rates start to go up and as the Federal Reserve contracts the money supply, something breaks, right? I think in this instance, this time around in 2023, it was Silicon Valley. Here we have one of the original diners here in New York. Not too many left, unfortunately. Unfortunately, there's also scaffolding all around here. I will give you guys one of my favorite diners that's one of the classics here in New York is close to Columbus Circle. I used to go there all the time when I was in college with some of my classmates, after class and things like that. It's right on the corner of 59th Street and 9th. It's called the Flame Diner. Now, it's not like really good food, but it's kind of nice to see original sort of small business diners still alive and well in New York, because unfortunately a lot of them are getting pushed out and forced to close, due to obvious reasons. I mean, rents are just too high here in New York. Hey, Billy is here. Good to see you. Thanks for being here. Rose Quartz, welcome. Billy, this is fun fact. Since 2008, over 500 banks have failed. Yeah, that's true, but some of them have been like meaningless. And maybe I shouldn't say meaningless, but I do know that statistic is true. But I think the reason why this is so newsworthy is because of the specific clientele, right? And just the ramifications that could have came about if, depositors weren't able to be made whole. Again, as I like to say, a lot of these accounts were accounts of companies, right? Startups that maybe employed 50 to 100 people, 25 people. And, if depositors weren't made whole, I mean, you were going to have, you would have startups scrambling for like bridge lending and all this other stuff. However, I will say this, to be fair, let's just say, just for argument's sake, that the FDIC, the Treasury, and the Federal Reserve didn't come together with this bailout plan. And the normal procedure happens, right, where the FDIC puts the bank in receivership, then they sell off the assets. In my estimation, I think depositors probably would have gotten back about 70% of their money anyway. Now, that's still horrible, right? 70% of your money if you're just leaving your money in a bank account. But it would have happened over probably a couple of months. And again, as we go back to the argument of perception, right? The perception in a fiat currency system and a fractional reserve banking system is everything. Trust and perception. So if you had every American hearing a story that, people are still not getting their money back, they're only going to get 70% of their money, you would have, I believe, it is my opinion, that you would have had national bank runs. You would have had everybody freaking out. That's my opinion. Now, maybe it wouldn't have gone down that way, but I don't think the Biden administration were willing to take that risk going into an election year, 2024. I just don't see it. So I think that's why we put together this package, the bailout package. Hey, NBA Elias says, hey Tom, I hope you had a good day today. I did. Very busy day for me, but I had a very good day. So NBA Elias, I want your take on this. We were briefly discussing what we think the Federal Reserve's next move is going to be. And I was watching CNBC today. Very seldom do I ever really watch it. But Wall Street is totally mixed on this. About half the people think that next week the Federal Reserve is going to pause or they're going to cut rates. And half the people think that the Federal Reserve is going to be steadfast with raising rates. I'm curious your opinion. I'm actually curious everybody's opinion. Maybe if you want to drop your opinions in the chat, do we think the Fed is going to be steadfast with raising rates? Or with this Silicon Valley bank situation, are they going to be forced to pivot? I don't know. I say we're going to get a 25 basis point rate hike. Here's another view of 432 Park Avenue. I think we're standing on the corner of 2nd and 56th. Rat thinks is half point raise. Wow, 50 basis points? Okay. Eddie B is here. Good to see you, Eddie. Welcome. Alexandria says, Tom, greetings from Brazil. Welcome to all of our friends in Brazil. Evan Weeks says, I don't know what they're going to do, but I could tell you that both options have risks. That's true. Let me put up my hood. It's actually getting windy. France Eagle says, I think the Fed will do the worst possible thing. Maybe. We'll see. So we're coming up on Sutton Place. We got 2 blocks to go and make a right. Brendan O'Brien says steepening of the yield curve. Dan Zhang says 25 basis points sounds like the most logical decision. Yeah, I mean, and not to sound like a broken record, but under my opinion, if they pivot or if they cut rates, now I'll make a prediction. I very seldom like to make predictions, but if the Federal Reserve cuts rates by 25 basis points, I think we'll hit circuit breaker limit down. I seriously think that. I think if the Fed comes out next week and cuts rates by 25 basis points, I think you'll see limit down in the market. And the reason why I think that is because the vast majority of people don't think that. They think, okay, the Fed's going to cut, that's going to signal positive news to the market, that interest rates are going to go down, people will have a little bit more breathing room, but I think it'll signal to the market participants that the Fed doesn't have things under control and that the Silicon Valley Bank thing could signal more contagion. Hey, NYC, what's up? Says, hey, is this Tom from MySpace? Yeah, I mean, I sold MySpace back in the day, walked away with, I think, 500 million, and now we just do these live streams walking around the city. Hey, Melissa is headed to Hartford, Connecticut this weekend for 90s Con. Wow. All my favorite 90s celebrities in one big convention. I didn't know about that. That sounds kind of cool. It sounds interesting. Usually those kind of things happen at the Jacob Javits Center. That's funny. Hey, Golf Endeavor says, hey, Tom, Fed will raise rates. Golf Endeavor, whenever you come back to the United States, and if you're in Miami, we got to meet up. We got to golf at Normandy Shores, or even maybe Miami Beach golf course if you're in the area. Evan Weeks is cutting rates signals that the Fed thinks the bank issues are a systemic issue that they need to address by easing off the tightening. Bingo. That's the boat I'm in. That's the exact boat I'm in. And I may be wrong, right? Maybe I'm off base here, but that is exactly how I would interpret that. Brendan O'Brien says, Tom, Silicon Valley Bank solution trying to plunge this or plug the stem holes coming out of the volcano. Yeah, that's true. Now, I don't think it's a great solution we came up with, but I mean, we had 48 hours to do it. Blues Writer, this is up 1/4, and then no Moss until Q4. But I also thought the Browns would make the playoffs. Hilarious. NBA Elias says, Tom, do you see QE starting by fall? Well, technically, right, if we want to get really granular and technical here, didn't technically QE just start this week? Right, I mean, think about it. Because with this bailout, right, and I understand we could argue the terminology to the cows come home, but just for sake of time, we'll just call it a bailout. If the Federal Reserve is going to honor or purchase these bonds at par value, isn't that QE? Right? I mean, think about what we've been reviewing for the past year. You know, in order to provide stimulus to the market, the Federal Reserve would expand their balance sheet by buying mortgage-backed securities and U.S. Treasuries. So if that's what they're going to do to the banks to help to bail them out of the situation, isn't that technically just QE right now? I don't know. All right, everybody. This is now the 59th Street Bridge. And there's actually a Trader Joe's right here inside the bridge. It's kind of cool. Hey, Alexander M says, hey Tom, I just wanted to say thank you. I just secured a legal internship after you gave me some great advice a few weeks ago. Not sure if you remember, but thanks. Hey, Alexander, dude, that's awesome. Well, congratulations on your success, but please do not say thank you to me. That's all your work, my friend. You took the initiative to take action and get after it. I didn't do anything, so please don't take away from your own success. That was all you, man. But congratulations, I'd love to hear that. Especially after the cataclysmic events that we've just been going through in the market. I guess that's some good news there. I'm sure you're gonna do great. I wonder if you're gonna go to New York for that. We'll see. Hey, Wen is here. It says Chinese propaganda is doing a campaign and urging people in the US to withdraw their money in hopes of causing a massive bank run. I don't know about that. I mean, I respect your opinion on that 100%. I'm not going to say you're wrong. I just don't. I don't personally agree, but I do respect that opinion. I think that's a little bit maybe too far-fetched. But hey, you never know. Maybe I'm wrong. I will say, and I said this to my friend the other day. I said, social media, particularly Twitter, did have an impact on this situation. It did, 100%. Wow, look at this. This is really beautiful. And I'll tell you why. If you think about bank runs in the past, right, if you go throughout history and you look at bank runs, you know, we'll use, well, okay, just pick your bank run, right? Pick your bank run of the past, particularly before social media. So we didn't have social media in 2008, I don't think, right? Yeah, no way. Maybe I think that social media was just starting in 2009 and 10. I don't even think it was around in 2008. But anyway, regardless, I'm getting sidetracked. Social media connects individuals, especially in the tech community when founders are all over Twitter. So when you had, again, not to sound like a broken record, but Peter Thiel sending out a Slack message to all of his founders, so all the companies he invests in, all the founders, to rip all their money out of Silicon Valley Bank, you don't think that word got around 100 times faster than it would have before social media? I mean, come on. You know, people were talking about it on Slack, Microsoft Teams, on Twitter, on Facebook, and this really just exacerbated and blew it up even worse than it really was, because if rumors going around on Twitter that one of the most successful venture capitalists and investors of our lifetime, literally one of the most successful investors of our lives, is giving advice to his founders, right, companies that he invests in, to rip money out of the bank, you don't think that's going to get around and spook a lot of other people? I think it had something to do with it. Now, granted, you know, the screws would have fallen off one way or the other. It's not to take away the blame of management. You know, management did a horrible job with managing the risk of the bank. Like no interest rate hedges and really egregious duration risk, you know. But I think social media does play into it a little bit, for sure. All right, so team, we have now arrived to Sutton Place. Here we are at 35 Sutton Place. And you'll notice the difference between the condos and co-ops here and a lot of the other buildings in Midtown. Very nice area. MBA Elias says, despite interest rate hikes, these bank failures could now lead to an earlier recession or even a deeper one. Very possible. Very possible. Now, I'm curious of what's going to happen with the real estate market. We'll talk about that in a minute. But check this out. Here at Sutton Place, you actually have almost like these normal style homes, right? These railroad style, brownstone style. Really nice. That would be the dream in Manhattan, to be able to walk to work and then literally walk to your front door and have your own place. That is the goal. Now, this strip of buildings here, as we pass Sutton Place Square, these are my favorite, and I think you'll see why here in a minute. Hey, J9 says you find the best areas with the most interesting looking buildings. I appreciate that. I mean, look, I love Sutton Place. Now, guys, did you hear about the crazy news that actually happened here the other week? I think a couple people died here. Like there was a car with, I don't even know what the story was. Maybe, does anybody know what I'm talking about? There was a vehicle parked on one of the sidewalks here that was filled with extremely toxic or poisonous materials, and I think a couple people died trying to deal with those materials. I don't know, but kind of crazy. But check this out. Now, this is one of the most wealthy neighborhoods in Manhattan. Quite obviously, right? I mean, if you own an entire, home here, don't share it with anybody, that's unbelievable. You walk right up to your front door. You can kind of see inside these places too. Really beautiful chandeliers, beautiful libraries, and very quiet. Very, very quiet neighborhood. You get to escape the chaos of New York City, which is always nice. Hey, photos from around New York. Did you hear anything about that, photos? I'm sure you must have. Well, look at this building. You have the beautiful contrast of that really, really deep, almost like red oak door. Beautiful white paint and the black frames on the windows. Really beautiful here. Kelly Grimes, it is not. Yeah, Lupe says love the red oak door. It's really nice. And look, this is your backyard. The 59th Street Bridge. How unique is that? These are some really, really unique properties here. Yeah, Vincent says what a beautiful neighborhood. It really is. It really, really is. And the unfortunate thing is we don't get to come up this way as often as I'd like. I'd bet you anything these are the original shutters on the windows too. Really nice. So we're gonna make a right, we're gonna make a left here. This is 57th Street. And I think the park is still open. You guys are gonna see breathtaking views of Queens, or I should say Long Island City, Queens. Just let me cross here. And the views are about to be amazing. Look at this house here, guys. Now imagine waking up, walking down 57th Street into Midtown to your office, coming all the way back after a long day of work, and coming back to your own house, overlooking the East River and overlooking Queens. That is unbelievable. Is it buffering? Let me know, everybody in the chat. Maybe, Nina, it's your internet connection. I don't think we're buffering, but we'll see. This is beautiful. Then you have a gorgeous view of the 59th Street Bridge here. Oh, you know what? I think they just closed it. I think it closes at dusk, unfortunately. But maybe I could try to show you guys a little of what I'm talking about. So during the day, you have this whole outside area here. Let's try to go to the other park. But, many of these houses in Sutton Place have their own personal backyards too. I mean, this is really prime real estate here. This is as good as you're going to get. Hey, John, what's up? Yeah, Brooklyn Heights is another beautiful, really, really beautiful neighborhood. Hey, Bernard Conte says, good evening, Tom. I'm enjoying your video. Thank you for your excellent work. Thank you so much. Appreciate it. We'll go up one more so I can show you guys the parks. The views are spectacular. Hey, cool weather farmer, welcome. Good to see you. You know, another interesting thing, oh, look at this dog coming up. Another interesting thing that happened today, because there was a lot of people talking about the price action in gold. So gold actually followed through quite a bit, but Bitcoin and Ethereum faded. Now, after the whole big banking fallout, you had a massive flight to precious metals and digital gold, Bitcoin. But Bitcoin is well off of its highs. At the same time, while gold followed through, we're back over 1900 in gold. I just thought that was interesting, that correlation there. Here's another one of these gorgeous front entrances here in Sutton Place. You have your own personal entrance, really, really nice. Let me try to walk in the street here so you can see the architecture I'm talking about. Really beautiful homes. It's almost like you're not even in Manhattan. Like, imagine if you just joined the live stream and you didn't know we started off the stream in Midtown Manhattan. You know, you would probably guess we're in Brooklyn or in one of the boroughs, but no, this is Manhattan. Look at the gorgeous architecture here. And a lot of these are all redone, by the way, too. They've been purchased and totally gut renovated. Speaking of that, it looks like this one is still being worked on. You could still see some of the original steam heat coming out of here, too. You see it? Wow. So this here is a view of Queens. You can see Long Island City, you can see the Altice building. And views of the East River as well as the 59th Street Bridge. Very unique. And you see what I mean? Look at some of these houses here. You have your own personal driveway. See, it says no trespassing private property. Your own personal driveway as well as your own personal backyards too. It's one of my favorite neighborhoods in Manhattan. You can see the backyard here. You have all of the grass, tons of trees, really, really nice seating. I think we have some time. You know, I apologize for starting late, but maybe we'll go down and check out the water. Look at these balconies here. Hey, Truth Teller says, if I lived in New York City, this definitely would be the place where I would pick to live. It is much quieter. Yeah, I mean, Sutton Place is a very, very sought after neighborhood here in Manhattan. This is actually one of the most wealthy zip codes in the country, Sutton Place, and you could definitely see why. You know, you are in Manhattan, but you have total privacy. Look how cool this is. So you enter your driveway, you walk down to your own private backyard, and you have the space of being on Long Island, but right in Manhattan. You have all your park benches over here. And in the distance here, I think that's the Williamsburg Bridge. And then that must be downtown Brooklyn. That must be the skyline of downtown Brooklyn right here. And then this is Long Island City. I'll give you a panoramic shot. But if you guys are enjoying the live stream so far, please feel free to leave a like on the video. Click the subscribe button if you're new. Share the show with your friends. We do these live streams about 7 days a week, starting at 8:30 p.m. from New York City and Miami. And now we're looking at the 59th Street Bridge. Now, in between Queens and Manhattan is Roosevelt Island. You could actually just make out the Roosevelt Island Racket Club in the distance. It's this big luminescent building right under the bridge. And this is going to be the brand new East River Park, which is kind of cool. I never even knew that this was in construction up until a couple weeks ago. Look at that. So this is like an elevated park. Hey, Harsh Daga, thank you so much for your very generous donation. We appreciate it. Your support helps keep these streams in motion. So thank you so much for your support. We appreciate it very much. I'll give you one more look of the houses overlooking the waterway here. Hey, Zen is here. Does I want to go fishing here? I'm not sure you want to eat the fish coming out of the East River. We'll see. Although it has cleaned up quite a bit over the years, I will say that. Now check this out. Imagine waking up out of your beautiful $10 million home, coming out here on a gorgeous August morning, 70 degrees, the sun is just coming up, you're reading the Wall Street Journal, Investors Business Daily, you're sitting down on the park bench, enjoying your coffee, reading the paper, and looking at this amazing view. It's awesome. It's unbelievable. Hopefully you guys will be able to experience this one day. If you're visiting New York, please come here 57th Street and just keep walking as far east as you can, and you could enjoy this park 24/7. Really beautiful. You could actually see a boat coming by here. Hawaii. I don't know. Hawaii, I think I would definitely explore maybe living in Hawaii at least part of the year. Although I hear it's very expensive. I think it's as expensive as New York or LA. Yeah, you are correct. Evan Weeks, the General UN, is very close here. Check out the current. There's always these counterclockwise and clockwise currents going on here. I don't know why. Maybe it's from the boats. Such a beautiful reflection, though. It's unbelievable. Hey, Rachel is here. Welcome. All right, I'll give you guys one more look at Long Island City, and then we will head back into Midtown. So we talked a little bit about real estate, but not in the way that we usually do. So on that topic, I think the biggest theme of the week on Wall Street is actually not all of these banks collapsing, right? It's actually one of the ramifications of the ripple effects from these banks collapsing, and it's yields, bond yields coming down quite substantially. So I have a question for the chat. I have a question for everybody here as we watch this tugboat go by. According to CNBC, the average 30-year fixed rate mortgage is now 6.5%, which is almost unbelievable because on Friday, the average 30-year fix was like 7.25%. talk about a massive move in the bond market. So do you think this is actually going to spur some people to pull the trigger on buying homes? Or do you think even though the average 30-year fixed has come down substantially, banks are going to increase their lending standards even more in light of all of the recent events? I think it's a very interesting question, because there's a lot of people still, right? And if we look at the data, there's a lot of first-time home buyers looking for that right opportunity to pull the trigger. And we just had a major home builder report their corporate earnings. The company's called Lennar. They actually had their earnings yesterday, but the conference call was this morning at 11. If you want to read the earnings press release, if you type !LEN in the chat, the Nightbot will drop the link to the earnings press release. And the CEO said something very interesting. The CEO said that every single time, and I'll quickly show you the driveway here, you have your own personal garage. Anytime, a rule of thumb in Manhattan, guys, anytime you have your own personal garage in Manhattan, the price is probably going to be well over $3 million. I mean, it's just unheard of to have your own personal garage in Manhattan. Very fitting for Sutton Place. Very fitting. But the CEO on the earnings call, he said anytime we saw material pullbacks in bond yields, there was a direct correlation with home buyers pulling the trigger and closing deals. So I don't know. I mean, this could go either way. I'm curious what you guys think. Hey, Jay is here. This is Tom. I think people are worried about what's going on with everything. Not many people wanting to buy. I hope I'm wrong because I want to sell my house soon. That's interesting. I think that's a very good point. I think I hold that point too. Think about how many people were about to pull the trigger to buy a home, and then this whole big bank run and collapse really scared people. I think, maybe that is going to show up in some of the consumer sentiment surveys next month. Nina says, Tom, 6.5 30-year fixed rate is high. Many not buying property. It's too shaky for the majority of buyers, not trusting the Fed raising rates. Yeah, well, I mean, in the grand scheme of things, 6.5 is technically not high. Let's actually go down 57th Street. But I think rates are going to go a lot higher. But just from a human psychology standpoint, we'll see what happens. Wow, look at that. This is an even better view of these homes. How gorgeous is that? Okay, I think I have to revise my statement. I always said if money wasn't an issue, I think I would live at 157 or Central Park Tower, something like that. I think I'd probably live in this one, the center one, in between the white one and the red brick. I mean, that is just amazing. I'm not sure if you guys could see it on the stream, but you could kind of see inside, and it is gorgeous in there. Nina says exactly, people pulling back from buying property. Yeah, and I think we'll talk about this tomorrow night, but we'll briefly touch on it tonight. On the commercial side of real estate, you're actually starting to see defaults go up in a very rapid succession, very, very rapidly. And it's not just some small players. These are big players, right? You're talking about the Blackstones and KKRs of the world defaulting on commercial real estate in Manhattan specifically. Also on the West Coast in San Francisco. We talked about that. And it's funny. Oh, guys, I totally forgot. It's been such a crazy night for me. So we had a conversation last night, really good conversation, by the way, about the housing crisis in San Francisco, the Bay Area, and New York. And I said, I met with the property developer, a very notable one here, and we were talking about doing the conversion with a lot of these old office spaces into residential apartments and the troubles, and it's not as easy as it seems. Did anybody see the news that came out? I think it was a New York One story, I think, with Mayor Eric Adams. He is rolling out a plan to work with many of the developers to repurpose these buildings. Did anybody see that? I forgot to program it into the Nightbot, but maybe if you just Google Mayor Eric Adams commercial real estate conversion. So I think the city's really going to attack this plan, and I think they should. Because it's very expensive. If you think about, one of these big commercial properties, these office buildings that was built in the 80s or even before, these things could probably have asbestos in it. So, the city's going to have to offer really big incentives for these developers, contractors and the like, to make it work, to do these conversions in most of these buildings. But I just thought it was like a deja vu moment. Like, we were just talking about this, and then the mayor is speaking about it the next day. David S. says lots of junk out there for $350K. John Kelly says, I prefer the East. Let me see. What'd you say? I prefer the East Side over Central Park Towers. I don't feel any personality in those towers units. Too sterile for my feeling. Yeah, maybe these buildings have a little bit more character, a little bit more history. I definitely see where you're coming from, for sure. They're both beautiful, both gorgeous. I wouldn't be complaining if I lived in either one. Let's just say that. Hey, the ABX girl says, I did in the apartments has to be $1,000 a month or less. So how is that going to work? And you guys are probably more experienced in this than I am. Maybe you guys have, maybe some of you are contractors, maybe some of you are big real estate developers. But how is that going to work? $1,000 rents? It's just not going to happen. I don't know. MBA Elias's green realty stock has been under pressure in the commercial real estate space. Manhattan's largest office holder, more trouble. Yeah, that's been my main thesis. I think commercial real estate is going to take a beating for obvious reasons, right? And it's not necessarily just about, interest rates and all that, but interest rates do play a big part in it. It's the big C. It's the big C. Because, the big C is pretty much over, but humans are creatures of habit. And I find it really, really hard to believe that anybody is going to be back in the office 5 days a week. Maybe 2 days a week, maybe 3. But, the more senior you are in a company, to get somebody to commute into Manhattan, it's just not going to happen. That's why you're seeing this big flight to quality to these Class A buildings, right? We just walked past one on Park Avenue, 425. Look at the Hudson Yards. So you're going to have companies that want to persuade their employees to come back to the office. You're not persuading somebody to go back to an 80s, a 1980s style cubicle. It's just not going to happen. So it's going to be interesting. I think the idea of repurposing these buildings for residential is a good idea, but property taxes are super high, cost of labor is super high. To make it work, I think it's going to be tough. Although they have made it work in some select buildings, which we've actually visited live here on the stream, one of which 95 Wall Street. Now, if you guys want to do some research for yourself at home, check it out. Go on Street Easy, go on Zillow, type in 95 Wall Street, and you'll kind of see, you're like, wow, that doesn't look like an apartment building. That looks like an office building. And you're right. I think it was I think it actually used to be Citigroup's old office down on Wall Street, and now it's apartments. But it's not affordable apartments. I think studios start at like $3,000. So again, in order to make it work, the rents are going to have to be extremely high. But yeah, check it out, 95 Wall Street. I actually used to work not too far away from there, so. Hey, Beacon, New York says commuting might be declining. but the recent news about the Long Island Railroad being overcrowded seems to be the contrary. It does, but I can weigh in on that a little bit. The Long Island Railroad recently changed the schedules, and there's less trains running, especially during rush hour, so it's like a nightmare. And before COVID, it was always like that. Before COVID, if you took a train, like a 7 o'clock train out of Massapequa Park, I mean, it was packed. It was packed. So you have two things happening. You have more people coming back to the office, right? But they're probably only coming back on, let's say, Tuesday through Thursday. And you have reduced schedules. But it's a good point, Beacon, New York. Very good point. 407 says even though the big C is in the rearview mirror, there's still a lot of fear out there. It's going to take a long time to go away. Michael Joseph says they cut the trains, that's why. Yeah, the Long Beach line, which I take quite frequently, they really hammered that one. I mean, that's almost like I can't even use it anymore. I mean, I'm just being a diva about it. I'm over exaggerating, but it's gotten significantly worse. Hey, Kevin Ramsey, what's up? Yeah. Hilarious. Hey, Valerie says just wait. All the property value will come tumbling down in New York City. It's already happening. Well, I mean, all of the leading economic indicators would lead to so. You're correct. Now, again, I sort of explained where I see the most opportunity. I guess I'll quickly explain it again for those of you who may have missed it. But in my opinion, and again, when I say opinion, it doesn't mean it's going to happen, obviously. But I think during 2021, and the earlier part, I'd say Q1 and Q2 of 2020, I mean 22, there were a lot of big players, the Blackstones, the BlackRocks, the KKRs, and the like, that did a lot of big deals in the multifamily real estate space. Nina's like, did you just say diva? I did. They did a lot of deals. I think Blackstone closed on like 10,000 units last year. In 2021. The problem is those were all done with floating rate debt. I shouldn't say all of them, but a lot of them. They did a lot of deals with floating rate debt. And their thesis was, okay, even if the Fed raises the Fed funds rate by 300 basis points, right, to 3%, maybe 3.5%, we'll just raise the rents on the tenants. Unemployment's at all-time low. I don't think anybody expected the Federal Reserve to go to a 5 handle on the Fed funds rate. Right now, the Fed funds rate is 4.5 to 4.75, 4 3/4. Next week we're going to be at 5%. So I don't think many people on the street thought that. And if you've been watching the news, we're seeing really convincing, I should say, round after round after round of layoffs, particularly in the tech sector. I mean, Meta, which is formerly known as Facebook, again announced more layoffs that are going to be maybe even bigger than the round of layoffs they did last year. So I don't think their plan of just raising the rents are going to work, and I think a lot of this debt is going to re-rate at higher rates. And I think that could spell trouble. But whenever there's trouble, there's opportunity, and I think we'll probably be able to be there to capitalize. DC322 says you can be at home instead of the office, but the downside is the business may suffer because of the lack of foot traffic from the office buildings. It's a very good point, especially in big cities like New York. A lot of the bodegas in and around the city. Zabatatis says the Fed funds rate should go to 6% at least. A lot of complainers. Let me see. Hold on. Yeah, that's true. A lot of complainers are actually bad players in the market. Let them sink. Well, I mean, it could create opportunity. I mean, and rents are coming down, right? Rents are coming down because it may not seem like it. Excuse me, it's just very cold out. It may not seem like it, but rents are coming down. We did get the CPI out yesterday, and did anybody notice the vast majority of the increase came from shelter costs, right? So shelter accounted for about 70% of the increase in CPI. That's a big percentage, but if you look, that's a lagging indicator. I think a lot of that data is lagging. If you look at the leading indicators, rents are going to come down and valuations are going to come down. And if you also remember correctly, this is the second CPI report where the calculation has changed. So that means the CPI now has a greater weighting to shelter. So I think, in maybe 5 to 6 months, if the real estate market starts to really come undone here and we get a nice sizable correction, you're going to see a really big drop in CPI, right? Especially after the recalibration in the calculation. So, look, existing home sales data, 12 consecutive months of declines. New home sales data is declining as well. I would really suggest that you guys take a look at the press release from Lennar's earnings report. They reported earnings yesterday. So once again, if you type !LEN in the chat, it'll drop the link to the Lennar earnings report. And, I think one of the encouraging things about the report that may be good for new home buyers is they're willing to negotiate. They're willing to eat into their gross margins to get deals closed. The CEO literally said that on the earnings call. They said, look, our margins are usually 27%. We're willing to have some margin erosion in order to get deals done and in order to keep existing deals from canceling, right? Or to keep people from canceling their deals, right? So that can come in multiple fashions. They could pay down the principal, they could pay down the points on your mortgage. They can throw in incentives, or they could just cut the price altogether. I think you're going to continue to see that, which I think is good for consumers. So if I had to give, if it were me and I was in the market for a home, I think I see a very big asymmetric trade here. And what I would do is I would pick the neighborhood that I want to buy in, and I would rent there for 6 months, because I think prices are going to come down. You look at all the leading economic indicators. I would rent in the neighborhood that I want to buy in for at least 6 months, right? Maybe sublease someplace. And while I'm there, I would be negotiating like hell with a lot of these sellers, because it's slowly turning into a seller's market. It's slowly turning into a buyer's market from a seller's market. And that's good for buyers because you'll be able to really negotiate on these deals, particularly in the new home business. So, look, if you're in the market to buy, I think in 12 to 24 months, you guys are going to get good deals. And I think that's good. Maybe even 6 months, you're going to get good deals. You could probably still get a good deal in this marketplace if you negotiate hard enough. There's always deals to be done out there, but I think valuations will come down, and I think that's a good thing for the long-term health of the economy. I think it's actually a really good thing. Hey, the Mighty Ball, good to see you. Hollywood Bob, good to see you, Hollywood. Yeah, Blues Writer, says Tom, more fuzzy math, CPI manipulation again. Well, they've said that if we actually calculated inflation like we did in the 80s. Inflation in the United States is really probably around 10%, maybe 10 to 12. Nina says, yes, Tom, buyer's market around the corner of opportunity for those whom have capital. I'm one who will begin seeking a townhouse in a safe area in Orange County, California. Well, I hope you get a really good deal. And I think so let's take this into consideration. This is the last thing I wanted to bring up to the team tonight, and then I'll cut you guys loose because, again, I apologize. I was so late to the live stream tonight. I started at 9:30, and I got to get my train. But I will say this. There is a record amount of cash on the sidelines, right? If you look at money market funds, if you look at fund flows, there is a record amount of cash on the sidelines. And when prices come down, which I think prices will come down, I think you're going to see this market stabilize and have buyers come in because there is a record amount of cash on the sidelines. And I think that's going to go into equities as valuations become a little bit more reasonable. I think that's going to go into real estate as valuations become a little bit more reasonable. So, even though we're going through this really, really tough time here, and I think times may get a little bit tougher before they get better, there's always going to be opportunity on the other side. It's just, you got to be steadfast. You got to keep your head in the game, okay? You can't, run and hide under your bed. You got to get out into the marketplace no matter how tough it is. And you got to be there when the deals are to be done. And I think you guys will. Now, this is First Republic Bank. This is another one of the banks that has been in the news on news that they may need a bailout next. But I think if anything, JP Morgan Chase will probably just absorb them. Jimmy Chong, hey Jimmy, what's up? Says Tom, Swiss National Bank providing $54 billion in liquidity to Credit Suisse. Yeah, Jimmy, it's so crazy. The moment I started live streaming, I got the notification from the Wall Street Journal about that. So we covered that. And I mean, my take on that is a little bit different. We sort of talked about this, but Credit Suisse and Deutsche Bank particularly have been big trouble since the 2008 financial crisis. And I said, I mean, if you just want to look at the stock ticker yourself, look at ticker symbol CS on a monthly time frame, and that stock has been on a one-way ticket or a one-way trip to zero since 2007. It used to be an $80 stock, and it has just been bouncing around to zero for years. Even if you look back to 2020, the stock was still trading under $10, and I think Deutsche Bank may continue to fall by the wayside along the likes of Credit Suisse. And I think the Silicon Valley Bank situation just accelerated its demise, if you will, in my view. I think these two banks were going to have problems regardless, but the situation in America with Silicon Valley Bank, Silvergate, and the other one just accelerated the demise, in my view. Yeah, NBA Elias's Credit Suisse has long been in trouble, well before Silicon Valley Bank. Absolutely. Hey, Elizabeth Gill says, I feel like everyone is so highly leveraged on personal level, so hard to get out of being in debt. That's another good point Elizabeth makes. I think there was the piece of data that came out the other day, or I think last month. I think it came out last month, that credit card debt hit a new all-time record high, as well as personal debt. So I think what we really need to be in tune with, now that we're on this topic of, looking at the banks, And we go over this every earnings season. Now, earnings season is actually winding down, thank God. But at the beginning of every earnings season, the financials usually kick it off, right? So you'll hear from all of the major banks and whatnot. I think the most important thing is we can probably, well, not probably, we can use JP Morgan Chase, we could use Citi, we could use Capital One, we could use, Bank of America as a proxy for the health of the consumer. Because these are big credit card issuers in the United States, right? Now, the good news is Jamie Dimon, CEO of JP Morgan Chase, Brian Moynihan, CEO of Bank of America, says that the delinquency rates or the default rates on credit cards are still below pre-pandemic levels, which is good news. However, it is on the upswing. And after this big debacle with Silicon Valley Bank, I actually think, if I was a betting man, I think this could really change up consumer psychology, because it really scared the hell out of people. And I think it could get people in a different frame of mind to maybe be a little bit more conservative, maybe put off, buying that new car, maybe put off buying that new house, and maybe actually start paying down some of the debt. Who knows? But that's a good point. People are very highly leveraged. It's a really good point. Christine, this is Tom. I am banking with Chase. I bank with Chase too. I bank with Chase as well. Hey, Jumbo Jet says, do most of us join here to watch a stroll in New York? Yeah, most of us, yeah. Okay, we're coming up to 6th Avenue. I'll give you guys a quick shot. Billionaires Row, and then we'll call it a night. Because I think we're running a little bit over time here. So team, I think it was a good chat. Now, on Friday, I think we're going to hear from the University of Michigan. The consumer sentiment survey is out. Now, unfortunately, the survey will not encapsulate the Silicon Valley Bank issue. But I think next month, consumer sentiment is going to take a big turn for the worse. Especially after this big blow. So we'll talk about that maybe tomorrow. We'll also cover Adobe's earnings. So Adobe reported today after the bell, pretty good quarter too. So we'll break that down line item by line item. And I'll see you guys tomorrow. So thank you so much for joining. If you enjoyed the live stream tonight, feel free to leave a like on the video. Hit the subscribe button if you're new. Share the show with your friends. Feel free to connect with us on Twitter at Walks Wall Street. And we'll see you guys tomorrow. So Mimi, thank you so much. British Gray, Elizabeth Gill, appreciate it. David S, Cooking Bro, Line Sync, Hawaii, Felipe, NBA Elias, Kevin Ramsey, Abdullah, John, Dave, Western Mass Dave, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. I'll see everybody right back here tomorrow, live from New York City, 8:30 p.m. Eastern. Until then, take care, be safe.